Hello everybody, welcome to this week's edition of Northwest Quadrant Wealth Management E-News. Thank you for joining us. So stocks are in a bit of a sell-off mode as of late in the last few weeks, and we're starting to get some emails and calls with people panicking. And so, you know, there's definitely this concern on Wall Street and with retail investors that we are in a bit of a growth scare, and it's yet to be determined if this is just a run-of-the-mill sell-off and the growth slowdown is transitory, or if it's going to lead to something more significant like a recession. Only, I guess, time will tell. But, you know, as we say all the time on this show, that it's time in the market rather than trying to time the market. If you go back to when this bull market started, we've had lots of growth scares and lots of sell-offs that if you did something like go to cash or get a lot more conservative, you definitely paid the price in terms of your portfolio not performing as well as it could have if you did something dramatic. And so we're not urging you to do something dramatic here, but we're certainly paying attention to what's going on in markets because we do know that it scares a lot of you. The other thing that's happening is something called anchoring, and we've talked about this a lot in this e-news throughout history, where a lot of you get tied to the highest portfolio value your account ever gets to, and any penny off of that number, you're considered losing money. And so we have a lot of that going on right now. But if you look at markets, they're really, you know, the S&P's 3.5% off an all-time high. The Nasdaq's where we've seen quite a bit of selling. You know, it's the quickest 5% decline from the all-time high in a long time, which, you know, we're not married to the Nasdaq and don't have a lot of exposure there, but the rest of the market does. And so we understand that this is scary. You know, it always seems like you can come up with a lot of reasons for the market to continue to go down a lot more, and who knows, it might. But a lot of you don't realize that it was just 3 short years ago in 2022 where the market went down over 20%, and you all have forgotten about that. And so even if that happens here, we know that over time, stocks follow earnings, and earnings will grow over time, and stocks will take care of themselves. So we understand you're worried, but you know, we don't think anything dramatic should be done based on what's going on in markets.
The other thing we've noted is that it's the exact opposite half of our client base that thinks the world is ending versus the last 4 years. And of course that's pretty predictable, but when you sit on our side of the table, you realize over long enough time and with enough context that neither are right. But the important thing to remember is, like, we've seen this movie before. The tariff thing, there is a ton of uncertainty. No one has a clue how this is going to emerge. It's not done by legislative action. It could be over tomorrow for all we know, but the important thing is to stay invested. We've also seen yields decline pretty substantially over the last 5 weeks, really since the inauguration. So the bond side of the portfolio going forward, you know, is not going to be offering the same sort of upside that higher interest rates did. But whether or not this growth scare materializes into a recession, still tough to see. But of course, remember, ultimately earnings are what drive stock prices, and earnings season has been utterly spectacular.
Yeah, so if you have questions about your account or your situation, give us a call at the office. The number here is 800-743-0988, or you can email either one of us, Josh or Tyler, at northwestquadrantwealth.com. Remember, let your own situation, your personal circumstances dictate how we manage your money, not the market, because we can't control the market. We'll see you back here in 2 weeks.